Welcome back to New Orleans. Welcome back to the Gold Newsletter YouTube channel. My name is Kai Hoffmann. I'm the JR Mining Guy on Twitter, also the CEO of the CORP Financial Group. And I'm joined by Alex Scanlon, Managing Director and CEO over at Barton Gold. Alex, great to see you. Pleasure meeting you.
Thank you for having us.
Absolutely. First time on the program. We need to start with an introduction, Alex. Who's Barton Gold and what are you guys doing?
All right, really simple introduction for us. We are a South Australian focused gold developer. Right? So very pure play. We have gone in and consolidated an historical gold district that has been producing high-grade gold for about 130 years. This is right next to the big IOCG district where BHP has its Olympic Dam. It's Olympic Dam's on one side of the highway, we're on the other. So we've bought all the historical exploration producing assets of significance. We own the only gold mill in the region. We've actually taken a step back and are investing tens of millions of dollars in expanding the regional geological knowledge and creating a multi-million ounce resource base, because these assets were previously producing about 60,000 ounces per annum, and we've got an objective to actually restart them and scale them up to about 150,000 ounces per annum production.
Fantastic introduction. To get everybody on the same level, I like asking that question. It's about cap structure. And where do you sit? How many shares do you have outstanding? Cash position?
Yeah, so pretty simple capital structure. Obviously, Australian companies tend to get teased about how many billions of shares they have on issue. We've got 195 million shares out, and we trade at about 24 cents Australian. So we sit in that sort of 45 million Australian dollar market cap, and we've got $9 million in cash. So we're in that sort of mid to high 30s Australian for enterprise value, or about 25 US. One thing that we do point out is we actually have about $4 million worth of gold in concentrates. Kind of another unique angle that we have is we monetize our assets. So we generate concentrates by, whether it's cleaning out the mill or processing stockpiles. This allows us to keep restocking our capital internally. So if you think of like an adjusted EV, it's actually a bit lower, but more or less.
So you're still running the mill then?
So we're sort of actually we're actually cleaning out the mill. What we started doing was looking forward to a stage one restart of operations. So our that middle distance big picture target being 150. We bought these assets specifically because we can build a bridge to 150 that doesn't involve that almighty leap where most people belly flop, right? That's we're sort of professional developers and asset managers. So it's really about, if we're going to get from A to D, how do you get from A to B, B to C, and C to D in a lower risk, lower cost methodology? So we have our existing mill, we have an historical high-grade gold field that we're building up into shallow, accessible high-grade gold. That will be a bridge, essentially a stage one bridge, to that stage two expansion, and on a much lower risk basis to that 150,000 mark. So we started doing some work on the mill to look at, okay, we think we can optimize the gravity circuit. What do we do with the leaching? Do we debottleneck or expand the capacity on crushing and grinding? And we actually started taking off components of the mill, and as we were sort of taking off equipment, boom, stuff is falling out. We had a pretty good sense the mill hadn't been properly cleaned out before, but we went and did a full clean out of the gravity circuit, and between between the top of the gravity circuit and the gold room, we took about $6 million worth of gold out of the mill. So it's nice when you're doing capex you would do anyway, and it's paying you back 10 to 1.
Absolutely. We got a little ahead of ourselves here, real quick. Let's, on the capital structure side, we'll get to the operations because I want to know a lot about it. Do you have any institutional support? Who are some of your biggest shareholders before we get to that?
We do. So we've had a number of institutions from Europe and North America and Australia ever since we listed. So we listed about 2.5 years ago on the ASX. We're now on the ASX and OTCQB and Frankfurt Exchange. We had a number of institutions before listing and at listing, and actually quite recently we put out a resource update earlier this year. And then we were approached by a number of institutions who said, look, we've been following your story, we like the strategy, we like the plan, so can you sort of create an opening for us to come in? And so now we've got sort of 8 or 9 specialist institutions who specialize in resources investing, but more particularly gold resources investment. So these are names like Merck's ASA Gold Fund, Ixios Asset Management, Bilingual Capital, Collins Street, Argonaut's New Gold Fund are in there. So a pretty good representative group of gold specialists.
I have to ask you a bit of a cheeky question because we're here in New Orleans in the USA. Like, why is an Australian company marketing up here? Because right now, based on how the markets are doing, the Canadians and the Americans are all marketing in Australia.
Yeah,
what are you doing up here?
It's true, right? Yeah, look, I think for us, it has to do with the fact that we're kind of going the opposite way, right? So when we had COVID, right? So we IPO'd this company during COVID, and in Australia, I think a lot of people remember kind of the news reports. We had a pretty draconian lockdown. So, first of all, we're on the other side of the planet, and second of all, we were kind of locked in. So when we IPO'd the company, we didn't really have the opportunity to get out and engage with investors. So we actually had a lot of investors in North America and Europe that we didn't really get to see. So we're kind of making up for lost time. And I know that everyone's kind of going to the ASX for liquidity, but we've actually been seeing a lot of growth in our share registry from North American and European investors. So we're just kind of getting the story out there, and partly that has to do with making sure that people are aware that if they want a near-term developer in a tier 1 jurisdiction that's advanced with a blue chip team, there are some really interesting value opportunities in Australia. And I think people are starting to make that connection.
Blue chip team, you have to elaborate on that.
Yeah, so we kind of started this whole thing on sort of two bases. One, let's go unlock this region that's really kind of been piecemeal developed, in little tiny high-grade operations over 130 years. And two, we need to build a team that has a diversity of capability and a lot of expertise actually building and developing these things. So, these days, right now, everyone's talking about this big deal between Newmont and Newcrest, right? So Newmont buying Newcrest, going into Australia. Well, actually 20 years ago, Newmont bought Normandy. So 20 years ago, buying Normandy was at the time Australia's largest gold producer. And so if you look at our sort of senior leadership team, more than half of our senior leadership are former Normandy and Newmont. So we have a really strong pedigree in not only gold exploration and development, but actually in South Australia as well, where we're based.
Let's get back to the project. I really want to learn more about the infrastructure that you have in place already, that you're cleaning out, and also the permit. So run me through the, what was it called? I'm missing a word here. It's late in the afternoon. The state of the mill.
Yeah, okay.
So run me through that. What is it looking like? How rusty is it? Or how clean is it? How usable?
Yeah, so the mill's actually in pretty decent condition. So the mill was last running in September of 2018. So we've had it on care and maintenance since then. And when you think about sort of the orientation or the layout of our projects, we have our mill and the camp that goes with that. We have our Tarcoola project, which is sort of the home of high-grade gold in South Australia. And that's where you've got this high-grade gold field. And then we have the Tunkillia project. So what we're looking at is using that mill to basically reanimate that Tarcoola project. Across all of that territory, we have different camps, so we've got a very strong operating platform. And then when we think about the sort of the state of the mill, it's really a recommissioning as opposed to a rebuilding, right? We often hear a lot about mills. So I've got a mill; it's 25 years old. Don't worry, we can just put some money into it, and that's not
we'll just
how it really
rewire
works.
it.
That's right. So, thankfully, we actually have a board member who specializes in building and optimizing mills. So we've got a pretty good sense of what we need to do with it. And it's really replacing the sort of hard consumables, right? Pumps and motors and piping, and then off you go again.
What was the capacity again? You mentioned 60,000 ounces a year. Is that running at max capacity for the current mill?
Yeah, so that mill has got a 650,000 ton per annum capacity. And so the way that it works, roughly speaking, for every 1 gram per ton head grade that you put through, that's about 20,000 ounces out of that mill. So the mill was originally processing underground ore from a nearby mine. And so that head grade would have been between 5 to 10 gram per ton. But basically, it was running a combination of underground and open pit ore from one of our assets. So it was running an average of around 3 gram per ton, and that produces about 60,000 ounces.
Is that max capacity then? So it's 60,000 right now at this level?
If you're putting 3 gram ore through it, yeah. But obviously, the higher that grade, the more you can produce.
Okay. Yeah. Let's run me through the stages of getting it back into production.
Yeah.
Where are you at? You mentioned the resource update that came out earlier this year. Where are you in the process? What can we expect next in terms of studies like PEA, PFS?
Yeah.
What's the state there?
Good question. So we have kind of a dual track mentality in the way that we're developing our assets. So the near-term asset potential of Tarcoola, being that sort of shallow, high-grade stuff, plus the mill, is a very attractive proposition because it's fully permitted mining leases, fully permitted mill, fully licensed mill. We have our EPA license. We can turn these on tomorrow. So what we want to do is make sure that we just build up a solid 2 or 3 year runway in terms of mineralization. And we're quite aggressively building up that subsurface picture. We just did a new seismic program, and we're going to go drill out shortly in early 2024. We're going to go drill out some of our most interesting targets for repeats of that high-grade mine. And in parallel, we're not taking our eye off the main focus, which is that in sort of the middle distance, that big picture target. And that's where we're looking at the Tunkillia asset, where we had about a 200,000 ounce resource upgrade earlier this year. And importantly, we did that for about $8 US per ounce on an all-in cost basis. So we're growing that, we're scaling that, and then building up these sort of smaller high-grade resources where you can use those as a step ladder, start stage 1 operations with an existing mill, and use that cash flow to self-fund.
What's the distance between the two projects, Tarcoola and Tunkillia?
It's about 70 kilometers or 45 miles. So fundamentally it's one project, but there's sort of two different tenement packages that together they're 3,000 square kilometers. It's an enormous area, about 100 kilometers of major known structures. But realistically, what you'll have there is a large bulk open pit as Tunkillia, and then Tarcoola will be operating as a high-grade nearby satellite, just averaging up the feed grade. So one project.
I know you haven't put out an economic study or anything, so I'm putting you on the spot a little bit, but to restart that mill, to sort out the pumps and all that good stuff, the piping, give me a ballpark figure. What can we look at?
Conservative, finger in the air estimate, I'd say probably $5 to $10 million Australian, right? So it's pretty minimal. That mill, the great thing about this mill is actually a very simple mill. The more complicated these mills get, the more it costs when you shut them down, and the more they kind of just freeze when you turn them off. So this mill is pretty simple. It was originally a 200,000 ton per annum plant servicing an underground, and then it was scaled up. But it's very, very basic: 2-stage crushing, 2-stage grinding, CIP circuit, gravity circuit, and it's really easy to optimize. So we're pretty happy with that.
What's the budget looking like to get to that stage before you even start turning it on? How much do you think you will need to spend to get to that stage of flicking the switch?
Yeah, we'll probably, I would imagine that if we said, look, at the end of 2025, we want to be reanimating that mill because by then we think we can lay out a clear pathway to that stage 1 operation. So during 2024, we can map out these new high-grade gold zones, and during 2025, we can lock them into a mining plan and reserve. Then, we're probably looking at spending another $5 to $10 million in drilling there. We've got an existing shallow open pit that has depth extensions of the high-grade material. There's a new high-grade zone sitting just behind the mine wall that we found quite fortuitously. So that's all really nice because you can walk straight into that pit, no pre-strip, no pre-capex, no pre-opex. So it's not actually a very large jump, and we've got about $13 million in cash and gold and concentrates on hand. So we're well funded. We sort of actually continue to monetize stuff internally. So it's relatively simple for us, and we're quite fortunate in that regard.
I'm scratching my head right now. I think we covered most of it, most of the story. I'm trying to think what aspect we forgot. We talked about the exploration side. We talked about the development side, cap structure. What did we forget?
Oh, look, I think it's a pretty good intro to the story. We have a tremendous amount of news, and a lot of companies have a lot of news, and a lot of it's kind of lighter stuff. But if you kind of go back over our 18 to 24 months since we've been really actively drilling in the public sphere, pretty much every month we have a significant material update, either on the corporate front or the project on the project front. We've had a really big 2023. I think the past 12 months we're up about 70%. So we're outperforming gold, we're outperforming our peers, we're outperforming our major producer peers, and that really kind of reflects this increasing attention. The key thing for us though is we're not slowing down, we're actually accelerating to that. So we've got about 20,000 meters of drilling we're finishing just now. So we should have another resource update at the beginning of December, and then we'll be actually looking to follow up with another resource update probably around early March. So it's pretty successive news coming out. I was going to say
quite aggressive because you said you'll start drilling only early in January. So those results will be part of that March update? Do you think you'll be able to incorporate them?
So we're currently drilling now. We started drilling in September. Yep. We'll finish about 20,000 meters by Christmas, but we'll actually have our first update out before then. Okay. And then all these 3 new satellite zones we have found but haven't converted to JORC, we might convert those, and then we'll be drilling again in early March. So we're really leaning into the pace and progress that we've had over the last 18 months, because we want to really push through 2024, get into PEA, like preliminary economic analyses, and lay out that pathway to full-scale development operations.
Fantastic. Super aggressive. I like it. You know, not everybody does a resource update every 3 months.
Yeah.
You got to be careful as an investor not to get too greedy here.
Yeah.
Because we like news. We like milestone news, right? So fantastic. Alex, it sounds fantastic. Really curious. I'd love to do more updates with you as well in the future, just to follow along, because at 45 million market cap Australian, sounds quite enticing, I have to admit. So shouldn't be adding too much personal commentary, but I'm quite intrigued personally. So fantastic. Alex, great pitch. Thank you so much for sharing it with us, and thanks for your time. Thanks for stopping by.
Yeah, well, thank you for having us.
Fantastic. Everybody else, thank you so much for tuning in to the Gold Newsletter here YouTube channel. If you like this conversation, leave a comment, leave a like, and of course subscribe to the channel if you haven't done so. Really appreciate your time. We'll be back from New Orleans with lots more. Thanks so much for tuning in.